Hi everyone. I trust all you are doing well. So in today's session, we will discuss about the financial modeling. Now, in this session, what I will do, I will tell you the basics of financial modeling, that what actually is financial modeling and what is the use of financial modeling and why a lot of analysts they prepare financial models. And I will take one case study where you will be getting an idea that what approach we should follow when we prepare the financial models. Now, once we will complete the introduction part, after that, what I will do, I will discuss various types of financial model in this module. So let's begin with the introduction part of financial model. Now, first, you should have the idea that what is the reason why financial models are prepared. Now, financial models are prepared to assess the valuation of business. This is the core purpose of financial model, right? If we want to find out the valuation of business. So what we will do, we will prepare the financial model. Now, various types of financial models are prepared, right? But I won't jump into that topic. I will discuss that topic in coming lectures, so you will be getting more idea. But right now, what you have to do, you have to remember that financial models are prepared to find out the valuation of business. Now, let's suppose if you are an investor, right? Or let's suppose if you are a businessman, right? There can be first option that you are an investor, or there can be a second option that you are a businessman. And what you want to do, you want to start an business, right? You want to start an business. Now, in this case, what you will try to do, you will try to find out the best investment opportunity. Like what you will try to do here, you will try to find out the best investment opportunity. And on the basis of, investment opportunity, what you will do, you will decide whether you should invest into this business or not. Now, how you will identify the investment opportunity, whether it is better for you or not? What you will do here, you will do cost and benefit analysis to find out whether business will give you sufficient return or not. So what you will do here, you will do cost and benefit analysis. This is the first important thing which you will do. Now, it might be sounding similar to capital budgeting. Yeah, it is very similar to capital budgeting, but you can say financial model is an advanced version of investment decision making. Where what we do, we try to find out the valuation of business. We try to compute, several things with the help of which what you can do, you can analyze whether to invest into the business or not. Right. So I will be taking a simple case study here to make you understand that how does financial models are prepared. Now, you should keep in mind few points when you will begin with financial model, right? So here, first you have to understand, first you have to remember that it is the numerical representation of business. What you have to do when you will prepare the financial model, obviously you will do some research on business, right? So let's suppose you are planning to start a franchisee business. Now there are various franchisee businesses which are available, right? You can take a franchisee business of an academy, or you can take franchisee business of McDonald's. So what you will do, you will do the analysis because you are investor. You will be investing somewhere around 50 lakh or 1 crore rupee. Now before you invest your hard-earned money, you should have the idea, right? Whether that business will be giving you sufficient return on. So you have to understand that financial model is a numerical representation of business where we will perform analysis in Excel. What we will do, we will perform detailed analysis in Excel, right? So here it is the numerical representation of financial aspect of an entity operation, right? Here what you will do detailed research on an entity operation. It is data-driven planning tool for making financial decision. Now, what we will do here, we will use lot of data. We will use lot of financial data to do analysis of financial numbers, right? Whether you should invest into the business or not. How it is made, this is the next point. It is made with the help of spreadsheet or dedicated financial software. What we will do here, we will use Excel to prepare the financial model. With the help of Excel, you will be getting great idea whether to invest into the business or not. Now, here, if you see what we have to do, we have to do the cost benefit analysis. And while doing the cost benefit analysis, if our result is positive, if let's suppose business will give us excess return, right? It will give us positive return to us. Then what we should do, we should definitely invest into that business. Now, if you see here, there are some assumptions which you have to remember, right? when an model will be considered as an good model. Now here the model should be realistic, right? When you are taking numbers, because here numbers plays a crucial role. Now what you have to do, you have to make a lot of assumptions when you will prepare the financial model, right? So if let's suppose you are trying to predict that how much or what amount of revenue you will generate from the business, so that number should be predictable number, right? You have to remember this thing, that number should be the predictable and realistic number. Here, if you see, assumption behind the model should be realistic. Now, if I'm trying to, forecast the revenue, now if I will undervalue my revenue, or if I will overvalue my revenue, here in both the cases there will be problem. Here in both the cases there will be problem. What is the meaning of undervalue of revenue and overvalue of revenue? Here, let's suppose I have done research on several businesses and I found that a restaurant business usually gives you the revenue of $100,000 in an year. But what I have done, I have followed the pessimistic approach and I have taken the number that I will be able to generate only $80,000. So what you're doing, you're undervaluing your business. Or here, what you have done, you have taken revenue that is $150,000. Again, what you're doing here, you are overvaluing your business. So in this case, what you have to do, you have to be very careful with your estimates. Your estimates should be proper. Otherwise, definitely what you will do the wrong valuation of your business. And if your model is not proper, if numbers are not proper, then definitely your model won't be giving you correct information. Let's suppose here you have taken assumption for the expenses. You have considered that you will pay salary of $30,000 to your chef, but the market rate is somewhere around $45,000, right? Here you have taken $30,000 in your model, but market rate of chef salary is 45,000. Now here, what will be the problem here? What you are doing, you are underestimating the expense. Now, if you will underestimate the expense, definitely your model won't give you the proper result. So in this case, what you have to do when you will create assumption, right? You have to understand whenever you will create assumption, those assumptions should be realistic. Now, how you can find out the realistic assumption? Here, you should do the proper research, right? You should do the proper research, then you will be able to get the proper assumption. Otherwise, garbage in and garbage out situation will be there. If you won't put proper assumptions there, so end result is going to be garbage for you. So here, next point, if you see here, error free. So careless error can lead to anonymous financial decision. So if let's suppose you have committed error in any point, then obviously your end result won't be going to be proper. So let's suppose if you want to sell your business, right? And according to you, the valuation of business is $50,000. But there are various other analysts who have communicated to you that your business valuation is somewhere around $40,000. Now you have quoted $50,000 in the market. Nobody will be buying your business if you will charge over for your business, right? So you have to be very careful while feeding the data into your model. Avoid bad habits when creating model. Avoid bad habit means that you should not overcharge. You should not overcharge or undercharge your business, right? If you will overcharge or undercharge your business, definitely you will face problem. If let's suppose you have overcharged your business, you want to sell your business, your actual business valuation is $50,000 and you want to charge $70,000 for your business, nobody will buy your business. Like nobody will buy your business. Let's suppose if your actual valuation of business is $50,000 and you are selling that business at $30,000. So definitely you are making a loss deal here, right? You are making loss deal here. So you have to be very, very careful. Then flexible. So, models change every day, right? If I talk about any model, so if any market change will occur or if any economic change will occur, so your model will change accordingly, right? So you have to create model in such a manner that if you want to make changes into the model, right? So that change can be implemented easily. See, whenever you will prepare the model, so what you will do, you will create multiple sheets. So all those multiple sheets should be linked well. If those sheets are linked well, right? So if you will make a small change in first sheet, automatically it will reflect in other sheets also, right? So you do not have to worry. We will learn about the linkages. We will learn that how you can connect the various sheets. You do not have to worry about it. But I have to give you the idea, right? That frequently what you will do, you will make changes into your model. So your model should be flexible that if you want to make any change in the future, so your model should be able to adapt that change. So changes in assumption are inevitable in today's world. Model should allow any level of change to be factored. Then you can say here, easy to use, right? Now, when you will prepare the model, right? Let's suppose you are an analyst and you have prepared a model for Zomato Limited. Zomato has asked you to prepare the model for their business, and you have prepared a financial model for them. Now your model should be readable, right? It should be readable and understandable without your efforts. Without your efforts means that, let's suppose if you're not available there, right? You have forwarded your model to the CEO of Zomato, right? You have forwarded this model to CEO of Zomato. So even though if you're not present there, if you're not available there, still what CEO should be able to do, he should be able to read this model, right? He should be able to read this model. So you have to put assumptions in such a manner, right, that it should be very clear. And if somebody wants to read your model, it should be readable format, right? It should be in readable format. Then here you can see self-explanatory. The same thing I have said here, that others should also be able to use your model and asset test if they can do so without your guidance, right? So it should be self-explanatory. So even though if you're not available or if your guidance is not available, still they should be able to understand your model. So I think you understood that how we have to prepare the model, right? These are the basic assumptions which you have to remember every time when you will prepare the model. Now, what I will do here, I will teach you that how you can prepare a model for franchisee business, right? It is important for you to understand that if you want to prepare a model for franchisee business, so what steps you will take, right? What steps you have to take and how franchisee models can be prepared. Now, first of all, you have to understand that what is the meaning of franchisee, right? So here you can see franchisee route is a popular business model across the globe. Nowadays, let's suppose if you do not want to start your own business, right? If you do not want to start the business from scratch, you do not have that much patience that you first create the goodwill for your business and then after you will generate the revenue, right? You do not have that much patience, right? So what you can do, you can jump into the franchisee model. You can jump into the franchisee model. Now, what is franchising? Here, what I will do, I will make tie-up with other companies or existing companies. Let's suppose I can take example of Zomato, right? Or I can take example of McDonald's or Pizza Hut, right? These are the examples of franchisee business. Now, let's suppose what I want to do, I want to start a business in MP, right? I want to start a business in MP, let's suppose in Indore. Now, I do not want to start a fresh business, right? If you will start a fresh business, let's suppose you want to start a restaurant. Now, if you will start a restaurant by your own name, so first, what you have to do in market, you have to create goodwill, right? So you have to wait for few years, right? You have to wait for few years. Once you will generate goodwill in the market, right? After that, you will be able to earn huge income, right? After that, you will be able to earn huge income, right? So first, what you need to do here, you need to create a goodwill in the market, right? And it is not guaranteed that you will be able to create the goodwill in the market, and you do not have that much patience. So in this case, what you can do, you can jump into the franchisee model, right? In this case, what you can do, you can jump into the franchisee model. What you can do, you can take the franchisee of Pizza Hut, like you can take the franchisee of McDonald's and you can start this business. Now we know that McD, Pizza Hut, Zomato, they have goodwill in the market. Now, if you will open a shop of McD or Pizza Hut, so automatically people they will visit to your shop from day one. You do not have to create any goodwill. But here what you have to do, you have to ready for the revenue sharing. Right, you have to ready for the revenue sharing. Now, there are various models of franchisee business. You can charge commission from these companies, or you can share revenue with them. There are various models, right? So I think you got the idea about franchisee business. So if you read this, so you will be getting more idea. In this route, an investor chooses to partake of an existing brand rather than building a brand. So what you will do, you will choose, an existing brand. You won't believe in creating new brand, so you will go with the existing brand. Franchisee get rights to sell the product or services of franchisor. Right? Franchisor means the business who will allow you to open up their new branch. Popular sector for franchisee are fast food, auto, petrol, fitness, etc. Now, what I will do, I will try to show you the real data, so you will be getting more idea Like how does franchisee model works? So let's see the real data here. We will jump to the real data. Just wait for a moment. I will showcase the real data here. Yeah. So here we can see the real data. So I will write down here franchisee India, right? And here you will get the details about franchisee. Yeah. So you can see here, various franchisees option is here there. So learnovation, hush puppies. Now here, if you see, they have provided you the information related to investment range. How much you have to invest if you want to take the franchisee of hush puppies, right? So you need to make investment of somewhere around 20 to 30 lakh, right? How much area is required here? Here you require area which is 500 to 1200 square feet, right? This much area you require. Franchisee outlets. How many outlets are there in India of Hush Puppies? So they are having somewhere around 500 to 1000 outlets. If you see here, Peter England, franchisee, so you need to invest somewhere around 20 to 30 lakh, right? Area which is required is 800, 2000 square feet. Then franchisee outlets, there are somewhere around 1000 to 10,000 outlets. Similarly, you can see various franchisee options are there, right? So if you want to buy or if you want to, start any of the franchisees, so what you can do, you can click on know more. And once you will click on know more, so here what you can do, you can take any of the franchisee, right? You can take any of the franchisee. So I think you understood that how does franchisee business works, and if you want to make investment into it, so what steps you have to take. So here we have discussed about the franchisee business. Now I will take a small case study here, right? I will take a small case study to make you understand that how franchisee valuation will be done, right? How you will decide whether you should start that particular franchisee or not. But before I start that model, I would like to let you know few fundamentals of financial model. Now, how financial model starts? First step is you have to define the assumptions. This is going to be the very first step, right? On the basis of assumptions, right? What you can do, you can build a great financial model. If your assumptions are proper, right? If your assumptions are clean and proper, you will be able to build a great financial model. So, what kind of assumptions you will create? Here, you have to create the assumptions related to revenue, right? You have to create the assumptions related to expenses, right? You have to create assumption related to source of finance, that from where you will earn or create the finance, right? From where you will bring the finance. Then next step will be here. You have to, find out the rates. You have to find out the rates for calculation of present value and future value, right? Calculation of present value and future value. You have to find out the growth rate. So these all things, you have to forecast, right? You have to create assumption for these line items. Now, if you are able to create assumption for these line items, then definitely you will be able to construct a great financial model, right? So the first thing is that you have to create assumption. Then I have already discussed this, that you have to, assume the revenue percentage or revenue amount. You have to assume the cost data also. Then once you have assumed the revenue data and cost data, then what you have to do here, you have to find out the EBITDA. What is EBITDA? EBITDA means earning before interest, tax, depreciation, amortization. So we have discussed about multi-level financial statement, where we have discussed how you can prepare the multi-step or multi-level profit and loss account. And there in detail, I have discussed about the EBITDA, or I have discussed about the operating profit, EBIT, etc. So when we prepare financial model, what we do, we calculate the value of EBITDA. We try to find out the EBIT. Then we forecast the PAT, that is profit after tax, right? And once you have forecasted the PAT, after that, what you will do? You will prepare the balance sheet and cash flow statement. So this is the whole process for preparation of financial model. Now, in this module, what I will do, I will discuss about a lot of financial models, right? So slowly and steady, what you will do, you will learn each and everything in detail, right? So let's process the model. Here you can see first what you have to do, you have to take the assumption in order as per the steps. Whatever steps I have discussed right now, what you have to do, you have to uh, take the assumptions, right? And first step is EBITDA forecast. Now, if you want to forecast the EBITDA, so first you have to forecast the revenue and operating expenses. So let's take here the example or hypothetical example of McDaisy franchisee, right? So what I will do here, I will take the hypothetical example of McDaisy franchisee, right? It is a quick service restaurant, and what you have done, you have decided to take the franchisee of McDaisy. Now, here, if you see revenue assumption is given, right? If you see here, revenue assumption is given. Now, what we will do, we will take these values into the Excel sheet, right? So you will get the access of Excel sheet and also you will get this PPT. So what I will do in front of you, I will copy all these numbers. So you will be getting an idea that how you have to proceed when you will prepare the model. So here, if you see revenue assumption is given, an estimate of business is given, right? That how much revenue business will be able to generate. So what I will do, I will take these values in Excel sheet, and what we will do, we will try to model the revenue for first year. Here you can see various information is given: Mac potato, then Mac bhajia, Mac nugget, size, value meal 1 and value meal 2. Number of units sold in a month is given, how many units you will be able to sell. So you will be able to sell 30,000 Mac potato, 20,000 Mac bhajia, then 15,000 nuggets, 45,000 sites, then value meal that is 45,000 and value meal 2 that is 28,000. Price is given here. So it is 150 rupee per unit of mac potato. And similarly, here you can see price is given. Now, here you will receive commission, right? Here you will receive commission. Whatever sales you will perform, whatever amount of sales you will perform during the month, on that sales value, you will receive this much commission. So 6% commission you will receive on mac potato, then 8% on mac bhajia, 9% of mac nugget, and similarly. And here the important line is given, take a growth rate of 10% yearly. Now, here, this is the year one data is given, right? Here we can see that year one data is given here, right? Year one data is given to us. Now, what we have to do if we want to forecast the coming year's data. So what I will do here, I will take 10% yearly growth rate. It means my revenue will grow by 10% each year. You have to understand that my revenue will grow by 10% each year. Now let's see the next point, and you will be getting more idea about it. Here, what next point says. If you see, next information is given related to the cost, right? Next information is given related to the cost. So first, what I will do, I will take the data related to income, and then we will proceed. So let me copy the data related to income here. So here I will copy this data in Excel. You can see this Excel sheet, and here I will copy this data, right, which I have shown you right now. So this is the data related to. So I have copied this data here, and here we can see the growth rate. What revenue is given, that is 10%, right? So here we can see the growth rate, which is given here is 10% every year, right? This is the growth rate here. Now, what we will do here, we will do the forecasting, right? We have to prepare a revenue model, right? So first we will compute the revenue of the business. And after that, what we will do, we will do the further forecasting. So you will be getting a more idea about it. So let's do the forecasting here. So we can see here that revenue is given, right? Here you can see the number of units which you will sell is given here. And apart from this, some other information is also given. So we will use this information to forecast the values here. So let's first find out that what is going to be the total sales in a month, right? So we will try to calculate here the monthly sales. That what would be the monthly sales here? So here you can see that I have written monthly sales, and after that we have to calculate the monthly sales of these products. So I will copy these products here, and we can drag these values. So you will be getting more and more idea about it. So here I will select the font size, and then we will proceed. Calibrate, and I will select here 14, right? This is going to be the font size here, and then we can forecast the revenue. So here you can see monthly sales is given. So I will copy that now, units here. Let's copy the units here. So otherwise, we do not have to copy the units. I will directly calculate the sales here, monthly sales. So how much is going to be the monthly sales here in this case? We can see, right? So monthly sales is going to be the sum product of sales units and price here, right? So this is going to be the monthly sales. And what I can do here, I can drag this value, right? I can drag this value, and this amount is given in rupee, right? This amount is given in rupee. This is going to be your total sales, monthly sales. So if I do the total here, so you can see the total sales will be of 3 crore 69 lakh 50,000, right? This is going to be the amount of total sales. If I want to calculate the commission income, so how much is going to be the commission income here? So I will write down here commission income. So here you can see if I want to calculate the commission income, so what I will do, I will take monthly sales and I will multiply this with commission percentage, right? So this much commission you will be able to earn every month, right? This much commission you will be able to earn every month. Now I can do here the total. So how much commission you will be able to earn every month? This much commission you will be able to earn every month. That is 27 lakh 56,000, right? This much commission you will be able to earn every month. Now here I will do some formatting for your understanding. So here we have calculated the total sales here. Then we have calculated here the total monthly sales and how much monthly sales you will be able to achieve each month, right? And we have also calculated the commission which you will earn in coming month, right? So this much commission you will earn. So is it possible for you to calculate that what is going to be the monthly commission or monthly income of your business? Simply what you have to do, you have to multiply this with 12, right? This is monthly commission. So if I want to calculate the monthly revenue, right? If I want to calculate here the yearly revenue or yearly income, so what I will do here in this case, I will simply multiply these values, right? I will simply multiply these values here, and I will maybe changes here. Yeah. So now let's prepare an profit and loss account. So now I will prepare here profit and loss account, and we will forecast the numbers for 5 years, right? We will do the forecasting for 5 years here. So I will write down here. Let's suppose you are planning to start your business in year 2024, right? So I can drag these values, and here we will do the forecasting for 5 years, right? So 2024, 2025, 2026, and 27 and 8, right? These 5 years I will take to forecast the numbers. Now, here, is it possible for you to calculate the sales or revenue for first year? Yeah, we have calculated the monthly revenue. And what I will do here, I will multiply this with 12. So here we will be able to calculate the yearly revenue, right? So I think you understood what I've done right now here. First, we have calculated the monthly revenue, right? What we have done, first we have calculated here the monthly commission or monthly revenue. Now, if you want to calculate the yearly revenue, so what you will do here, you will multiply this with 12. Now, here to simplify this, right? To simplify this, what I will do, I will take numbers in lakhs, right? To simplify this, what I will do here right now, I will take number in lakhs. So you will be able to easily read these numbers. So let's take the amount in lakhs, right? So here I will take the amount in lakhs, and what I will do here, I will divide this value with 1 lakh. Right? I will divide this value with 1 lakh. So here your yearly sales is going to be how much? It is going to be 331 lakh. Right? Your yearly commission or sales is going to be how much? It is going to be 331 lakh. What I've done, I have taken these number in lakhs. Right? Then here we have seen that revenue will grow by 10%. Right? Revenue will grow by 10%. So here growth rate for revenue is given. Growth rate for revenue is given, that is 10%, right? Which is given in assumption. So I will consider this rate, that is the revenue rate, and I will convert this into percentage. So here, your revenue will grow by 10%. So what I will do here, I will apply the formula, right? That is previous year sales, because my revenue will grow by 10%. So previous year sales multiplied with 1 plus growth rate. Growth rate is given here 10%, and I will freeze this growth rate because this is going to be the common value in all years. So here you can see this is going to be your coming year sales, right? Your next year sales is going to be 364 lakh, right? This is going to be your next year sales. What I will do, I will remove the decimal from here. So you will be able to easily read these numbers. So this is going to be your yearly sales. So what we have done, we have copied the data of income. And on the basis of this assumption, we found that what revenue you will be able to generate or earn in coming years. Now, what we have to do now, we have to copy the data related to expense. Now, here you can see the data related to expense is given, right? Data related to expense is given here. So let's copy this data and let's paste this data into the Excel sheet so we can forecast the numbers to complete our financial model. So let's copy this data here. And before I copy this data, I will insert some rows, right? So let me copy this data here. So what I've done here, I have copied the expense related data into the Excel sheet. Now, if you see what information is here. So here, rental cost information is given. Now, company pays two types of rent. One is rent for restaurant and second is rent for parking. Now, if you see restaurant rent is 175 rupee for per square feet, whereas parking rent is 50 rupee for per square feet per month, right? And here in bottom, if you see the information related to the square feet area is given. So for restaurant, company has taken 6,000 square feet, whereas for parking, company has taken 1,000 square feet area. So if I want to calculate the monthly rent, so what I will do, I will multiply 6,000 with 175. So I will get the monthly rent. If I want to calculate the parking monthly rent, so I will take 1,000 and I will multiply this with 50. So I will be able to compute the monthly parking rent. Apart from this, if you see information related to staff is given, right? So here how much salary company pay, this we can compute with the help of this information. So company has hired manager, chef, cashier, and housekeeping staff. And the number of staffs are given here, 2664. And how much salary company pays in a month? So here you can see monthly salary is also given. That is 40,000, 25,000, 20,000, and 12,000. So with the help of this data, what I will be able to do, I will be able to compute the overall salary, right? So we will calculate the salary also. Apart from this, if you see here, increment in salary information is given. So every year, what company will do, company will give increment of 10%. Whereas operation and maintenance expense is given, that is 15% of revenue, right? Operation and maintenance expense is 15% of revenue. So now let's prepare a working note for expenses. So first I will create a working note for rent, right? Now how we have to find out the overall or yearly rent value, we will see here. So here company pays rent for the factory, restaurant, sorry, and parking. So here I will write down restaurant and parking, right? So company pays rent for restaurant and parking. Now here I will write down the area. So area in square feet is given in the question. So let's write down here the area. So area is 6,000 and 1,000 square feet. Area is given here, that is 6,000 and 1,000 square feet, right? So these numbers are not in percentage. So what I will do, I will change the formatting for these numbers. Here I will take general, right? This is going to be formatting here. So let's calculate the values. Now here we know the cost per square feet. So cost per square feet is given in the question. So let's write down here cost per square feet. So here it is given, it is 175 for restaurant and for parking it is 50, right? Then if I want to calculate the monthly rent cost, so how much is going to be the monthly rent cost? What we have to do, simply we have to multiply these numbers, that is 6,000 multiplied with 175. That would be 10 lakh 50,000, and here this is going to be 1,000 into 50. That would be 50,000. Now, if I want to calculate here the yearly rent cost, So how much is going to be the yearly rent cost? It is going to be 10 lakh 50,000. And we have to multiply this with 12. So here we will get the yearly rent cost. We have multiplied these values with 12, and then we can do here the total. So total is how much here? Total is 1 crore 32 lakh. Right? Total is how much here? It is 1 crore 32 lakh. Right? So this is how what we have to do. We have to calculate the yearly rental cost. Now what I will do here, step by step, I will calculate the other cost also. Right? So let's proceed towards the salary discussion now. We will discuss about the salary here. So how much salary company will pay or company pays, here we can see. So salary information is given. What company has done, company has hired various types of employees, that is manager, chef, cashier, and housekeeping. So now if I want to find out their monthly salary, so first what I have to do here, I have to write down the number that how many employees company has hired. So here you can see numbers are given. That is 2, 6, 6, and 4. So we can drag this value and we can write down here monthly salary also. Right? We can write down here monthly salary. So monthly salary is given here. That is 40,000, and we can drag these values here. So it is going to be 25, 20, and 12,000. Now we can calculate here the yearly salary. So how much is going to be the yearly salary here in this case? It is going to be 2 into 40,000, right? And we can multiply this with 12. So this is going to be the yearly salary, which is going to be paid to the manager. What I've done, we know that company has hired 2 managers, and monthly salary which is paid to a manager is 40,000 here, right? And there are 12 months in a year, so I will take 12 here, and we got here the yearly salary, right? We got here the yearly salary. So this is going to be the total yearly salary. Now I can take the total here, and during the year, how much salary company will pay here? Company will pay salary. That is 47 lakh 76,000, right? This much salary what company will do, company will pay in a year. So what we have done, we have calculated the value of salary, right? We have calculated the amount of rent which company will pay. Now, if you see, next information is given related to the operation and maintenance. This we will take directly in the P&L account, right? This directly we will take in the P&L account because we do not have to do the calculation for this. Other information we have already taken here. So now I will record here expense. Right now, I will record your expense. So let's record the expenses. Let's record the expenses here. So now, first expense which we have calculated is rent here. Then second expense which we have calculated is your salary, right? Then you can see third information which we have calculated, which we have to calculate, that is operation and maintenance expense. So here I will write down operation and maintenance expense. Now we know the rent, that how much rent company will pay. So your rent which company will pay is 132 lakh. We have to take the numbers in lakh. So I will divide this with 1 lakh, right? I will divide this with 1 lakh. So here every year how much rent company will pay, that is 132 lakh. Here nothing is given related to the increment in rent. So we are assuming that company has made agreement with the landlord, and here, every year we have to pay this much rent only, that is 132 lakh. Here, if I talk about salary, so how much salary company has to pay? Company has to pay salary, that is 47 lakh 76,000. So here, uh, we have to take the salary in lakh. So here we will divide this with 1 lakh. And here you can see how much salary company will pay each year, that is 48 lakh. Now, information related to salary is given here, that company will provide increment of 10% each year. Company will provide increment of 10% each year. So what I will do here, I will take increment here. So previous year salary, then multiply, then 1 plus growth rate we have to take here, right? So growth rate is given here, that is 10%, right? So I will freeze this growth rate, right? That is 10%, and we can press Control Enter. So you can see this much salary what company will do, company will pay each year, right? So simply what I've done, I have taken the growth rate here. It means the salary will increase by 10% each year. Now, operation and maintenance expenses. So here in example or in case study, if you see, here it is given that operation and maintenance expense is going to be 15% of revenue. It is going to be 15% of sales. So what I will do, I will take this number and I will freeze this number because this is going to be common in all years. So I have freezed 15% and I will take your revenue. That is 331 for first year, right? And when I will drag this value in other years. So automatically, the year of sales will change. So I will press your control enter. So here you can see the operation and maintenance expense is going to be the 15% of sales, right? So here what we have done, we have calculated the total expense, right? We have calculated the total expense. So let's do the total of expense here. So here I will do the total of expense, and here we can find out the value. So if I want to do the total of expense here, so I will write down alt equal to sum, and I can select these three values. So this is going to be the total expenditure, right? This is going to be the total expense of the business here. I think you understood how we have to calculate these values. Now let's jump to the next calculation. Now, after calculation of total revenue and total expense, what we do, guys, here we calculate EBITDA. Now, if you want to calculate the EBITDA, so what you will do, you will uh, subtract the total expense with the sales, right? You will subtract the total expense with the sales, and then you will be able to calculate the EBITDA here. So, if I want to calculate the EBITDA, that is going to be earning before depreciation, earning before tax, depreciation, and amortization. So what is going to be the formula here? Here formula is very simple. That is sales minus total expense. Sales minus here total expense we have to do. So once you will subtract the total expense with sales, you will be able to calculate the EBITDA here. So this is going to be sales minus total expense, and here you will be able to compute the EBITDA. But the assumption which we have taken, right, there we have to make small change. So what I will do, we will jump to the PPT and we will see more data here. You can see that usually what we do, we calculate EBITDA, right? Once you have calculated the total expense, we calculate the EBITDA. Now here, once you have calculated the EBITDA, let me show you the numbers. You will be getting more clarity here, right? Now, once you have calculated the EBITDA by subtracting expense with sales, right? After that, what you will do here, you will subtract the depreciation and amortization, right? Here, what you will do, you will subtract the depreciation and amortization. Once you will subtract the depreciation and amortization here, so here you will get the amount that is going to be EBIT, right? That is earning before interest and tax. Now, from earning before interest and tax, once you will subtract the interest cost here, right? Once you will subtract the interest cost here, so you will be able to calculate the EBT, that is earning before tax, right? And from this, we can subtract the tax and we can get here the PAT, right? That is also known as net income. So here you will get the net income or PAT, right, after subtracting the tax amount from here. So this is how we calculate the values. So here we have taken the example of franchisee business, right? Here what we have done, we have taken the example of franchisee business where you won't make any investment into the fixed assets. Now, if you won't make any investment into the fixed assets, right? So you have to understand that you won't record any depreciation amortization cost. How you compute the depreciation amortization cost if you have incurred any expense related to the fixed assets, right? So we have not incurred any expense towards the fixed assets. So here we do not have to record depreciation and amortization cost, right? So here your EBITDA is going to be equivalent to the EBIT, right? Now, if you read this line, so you will be getting more idea. EBIT forecast is the second step in this model. We are skipping this step as we do not have the fixed asset which will be depreciated. So no depreciation means EBIT is equivalent to EBITDA. So you have to understand EBIT is equivalent to EBIT. So let's jump to this Excel again and let's see how we have to calculate the values here. So here EBITDA, or we can say it is EBIT. So what I will do, I will replace EBITDA with EBIT, right? How we have calculated EBIT here. We have taken sales and we have subtracted sales with total expense. So we are able to calculate the EBIT. Now we have to subtract here the interest cost, right? What we will do here now, we will subtract the interest cost from total expense, right? Now, once you will subtract the interest cost from total expense, right? So you will be able to calculate the EBT here. So let's interest paid. So we do not know how much interest we have to pay. So let's jump to the PPT again and let's see if any information is given related to the interest cost. Now here, if you see, debt assumption is given, right? Here, debt assumption is given. That is to find out the interest cost, right? And tax, we require some assumptions. You can see initial cost is given as 65 lakh, right? What company has to do? Company has to do the renovation. Company has taken one building on rent, right? But here what company has to do? Company has to do the renovation of this building, right? Renovation of this building. And to renovate this building, company has to spend somewhere around 65 lakh rupees. This is going to be the initial cost. Then you can see here deposit for restaurant. Here, what you have to do, you have to give 6 month rental as the deposit, right? Apart from initial renovation, you have to pay 6 month rental amount as the deposit, right? That both is going to be your initial investment, like the total of both, that is renovation and deposit, is going to be an initial investment. Now you can see your initial funding is given, debt for 5 years. So whatever total initial investment you will do, whatever total initial investment you will do, from that investment, right? What you have to do, you have to take 50% debt from the market, right? You are having 50% funds with you, and remaining 50%, what you will do, you will borrow from the market, and you can see here interest rate is given for the commercial loan, that is 13%. How much interest you have to pay? You have to pay 13% interest. Debt will be repaid at the end of 5 years. Here assumption is given that you will repay the debt amount after 5 years, whatever debt you will borrow. So interest cost will be constant for all 5 years. What you will do, you will pay interest for all 5 years. I think you are able to understand here, right? Now let's copy this data and paste this into the Excel sheet so we can do working on it. So I will copy this data and then we can proceed ahead. So I will copy the initial investment cost here in Excel. So, so this is the information related to the initial investment cost. Right? And deposit which we have to pay to the restaurant is 6 month rent, 6 month rent here. And we know the debt funding is going to be the 50% of initial investment. So here I will write now debt funding is going to be the 50% of initial investment. Right. Apart from this, here other information is given that interest rate is 13%. It means if you have borrowed loans, so how much interest you have to pay each year? You have to pay 13% interest each year. I think you understood this. Now let's calculate the initial investment amount, right? How much you have to invest. So here I will write down initial investment amount. So we know the renovation cost, how much you have to spend on renovation. So that is 65 lakh, and you have to pay 6 month rental as the deposit, right? So here we know how much rent you have paid. You have paid rent, that is 1 crore 32 lakh. So would you be able to calculate the 6 month rent? This is your yearly rent, right? This is your yearly rent. So if I want to calculate the 6 month rent, so what I will do, I will take yearly rent and I will multiply this with 6 and I will divide this with 12. So here we will get the value, that is 66 lakh, right? Here we got the value, that is 66 lakh here. I think you understood, right? This is the value, or this is the amount of deposit you have to give to the landlord. So if I do the total here, so how much is going to be total here? The total is 1 crore 31 lakh, right? You can see the total value is how much here? The total value is 1 crore 31 lakh. Now, what you will do, 50% funds you will borrow from the bank, right? 50% funds, what you will do, you will borrow from the bank, and remaining you will invest from your pocket. Now, if you will borrow something from the bank, so definitely you need to pay the interest, right? So what we need to do here we need to calculate the interest cost. So let's calculate the source of finance here. Let's calculate here the source of finance, from where you will bring the funds into the business. So equity fund, how much you have invested from your own pocket, that is going to be the equity. So here 50% you will invest from your own pocket. So I will take here 50% of 131 lakh, that is going to be 65 lakh 50,000. And how much you will borrow from the bank? You will borrow here 50% of 131 lakh, that is 65 lakh 50,000, right? This much what you will do, you will borrow from the bank. Now, is it possible for you to calculate the interest cost? Will you be able to calculate the interest cost? Yeah, we can calculate the interest cost now, right? Here we know how much debt we have borrowed, and we also know how much interest we have to pay, that is 13%. So let's calculate here the interest cost. It is going to be how much? It is going to be 65 lakh 50,000 multiplied with 13%, right? So this much interest you have to pay, and we have to keep the numbers in lakh. So I will divide this with lakh. So every year, what you have to do, this much interest you have to pay. That is somewhere around 9 lakh, right? And I can copy this value in other cells also. So you have to pay this much interest. So what is going to be your EBT in this case? How much is going to be your EBT in this case? So here your EBT is going to be the difference between EBIT and interest, right? So this is going to be your EBT. Then if you want to calculate here the profit after tax, so what I will do here, I will take the tax rate, right? Now let's see if tax rate is given in the PPT. So we can take the tax rate from there. Otherwise, if it is not given, we can make an assumption, right? So here tax rate is not mentioned. So what we will do, we will take 30% tax rate here, right? We will assume that company has to pay 30% tax. So let's take here the tax rate, which is going to be 30%. So here we have calculated the EBT, right? Now we have to adjust the tax amount. Tax is going to be 30% of EBT. So let's calculate here the 30% of EBT. That is going to be 93 into 30%. That is going to be 28 lakh. And we can drag this value into other cells. And here we can calculate the net income, right? Or which is also known as PAT. Which is also known as PAT. So here we can find out the value, this minus this is going to be your net income, right? So what we have done here, we have calculated the PAT. And I think you understood how we have calculated these values, right? It is very easy to understand if you will read the assumptions carefully, right? And I think you understood that how we have calculated these values here. So quickly you can see these assumptions, right? And again you can revise everything. But let us finish this video. Then what you can do the revision of these assumptions which we have made. Now, see what we have to do. We have to find out the value of business, right? Whether we should invest into this business or not. And also we have to find out, the IRR also. We have to calculate the present value and we have to find out the IRR also here. So remaining calculation we will do in next lecture. So you will be getting more idea. So today's homework is that you have to revise what we have done till now. And then remaining concepts you can watch in next video. Thanks a lot for watching this video. Thank you.